but I have gold, I have silver uh, that could easily pay that off. And why would I want to give up ounces now to pay off a 3.5% loan or a 4% loan when you could see metals within a short period of time? Once this thing blows up, you could see metals double, triple. I mean, you could see 10 baggers. So, why use ounces at current prices, which are suppressed, when if there is a system to pay the debt down, I'll be able to do it.
I'm curious if a Fed rate cut is the beginning of the end. Is that would that be sort of the Damocles sword that's sort of hanging over the U.S. dollar? As soon as the Fed starts cutting, the U.S. dollar is done. Is that maybe too extreme, or is that something you would agree with?
If let's say in the March meeting between now and the meeting, they decide we're going to cut rates. I don't think they will, but they decide that they're going to cut rates. You would then see weakness begin in the dollar, and I think that would pretty much push the boat from shore, and it would be all downhill from there. I think you got to keep in mind, if they cut rates, you got to wonder. You need to know, why did they cut rates? What were there any events ahead of time that forced them to cut rates?
Absolutely. Okay, no, that makes sense, and we really can't predict those because the data is definitely not pointing at a rate cut right now. So at least not the next two sessions. So, Bill, you're precious metals expert, of course. Writer and of course broker about it as well. So I'm curious, the role of gold. Has it changed at all? And I think we need to talk about the recent price move above $2,000 and the new floor that's been established.
I don't think gold has a new role. I think the role of gold is money, and everything else is credit. I mean, J.P. Morgan testified close to those words in Congress. The reason you want to own gold, or the reason you want to own silver, is because they cannot default. And what we talked about earlier, the world being, or literally the whole world, but led by the U.S., is hyper indebted, and we're moving into the phase, and you're already starting to see it. We're moving into the default phase, and that's why you want to own gold. That's why you want to own silver, because in a world that is defaulting around you, gold nor silver can default. And it goes back to Richard Russell, for years and years and years, said that when it finally blows up and goes down, the one who loses the least will be the winner. There's not going to be any outright winners that profit from the collapse, but there will be those that have gold and silver. They will have capital when the system reboots, when the majority, especially if you agree with the great taking, which I do, because I do believe that that's the plan, is to basically take your assets. If you have capital when this thing reboots, your family will have wealth for generations upon generations.
Hold on, just switching here. There we go. Bring him back on the screen here. That's interesting, like Bill. Like we need to talk about U.S. dollar and gold as well. Gold's value will increase. I think we're certain about that. The question is by how much, and will it buy us more, or will it remain at the same level because the U.S. dollar is just so much worse? I think that's a question I want to discuss with you as well.
I think that's an easy one, because there is all kinds of leverage in the gold and silver markets, but that leverage is to the short side. And there's leverage, obviously, in the stock market, the bond market, that's on the long side. In other words, borrowed money has been and is being used to prop up stocks, prop up bonds, but it's also being used to suppress the price of gold and silver. And it's done via naked futures contracts on both COMEX and the LBMA. So what that does is that increases the supply, if you will, but it's supply of paper metal. It's not real metal itself. Once once credit breaks, that's when, or once credit is much more difficult to get, that's when you're going to see asset prices declining in vast swaths, because the debt has been pulled. On the gold and silver side, the way to close that trade, they're going to be forced to buy, not sell, because they've already sold. So uh, the suppression scheme has been done with naked short contracts.
Gotcha. It's like Bill. One last question on the gold topic, and it's something that's puzzling me a little bit based on everything we've discussed right now. Why aren't the generalists or general investors buying gold right now? I'm just looking at the latest gold report from the World Gold Council. We're still seeing outflows, in particular in North America, from the ETFs. Yes, it's paper gold. I get it, but bullion is a bit different. But still, there's outflows. Even the bullion trade has been decreasing. I think the bullion sales have been decreasing. The question is why? Why is that?
Well, the first part of your question was about the generalists. Generalists basically chase trends. And what we just discussed, I mean, they've suppressed gold, they've suppressed price, they've suppressed the miners. So you're not going to have the generalists follow that because the price action has been horrible. They've painted the picture. So the generalists, what are they buying? They're buying the Magnificent Seven. As far as metal flowing out of North America, that's an easy one. All you have to do is look at the premium in Shanghai for gold of $50, and there's a premium north of $2 for silver on the Shanghai exchange versus the COMEX and the LBMA. So you've got natural uh, arbitrage that's buying gold in the West, buying silver in the West, and selling it in Shanghai, selling it in the East. So you've got, and they're locking profit in on every single trade. It's automatic profit. As long as it gets delivered, it's insured, and you get paid on the other end. You've locked in a profit. So that's you're watching metal flow from west to east.
Gotcha. Um, where are you investing right now? Last question. If you were now, if I were to come to you today with $100,000, say, Bill, can you invest this for me? How would you do it? And again, given this is not investment advice, this is just a rather like a more of a general question. Like, where do you see the trends? Where would you put your money right now?
Well, I view the world as defaulting. The entire global financial structure is in the process of defaulting. So I think it's a no-brainer. You just buy physical gold, you buy physical silver, and you will have something when the smoke clears. Um, if it were someone who had debt, then you've got to think, well, would I rather pay my debt down or would I rather hold gold or silver? I personally do still have some debt at very low interest rates, and that's why I've not paid it off. But I have gold, I have silver uh, that could easily pay that off. And why would I want to give up ounces now to pay off a 3.5% loan or a 4% loan when you could see metals within a short period of time? Once this thing blows up, you could see metals double, triple. I mean, you could see 10 baggers. So, why use ounces at current prices, which are suppressed, when if there is a system to pay the debt down, I'll be able to do it. And if there's not a system to pay the debt down, once there is a system reboot and the foreclosures begin, then I'll use the gold and silver. And one piece of advice: if you do have debt, I'm a proponent of being at least 6 months, preferably a year ahead on the monthly payments, because when this goes down, that puts you at the back of the line for repossessions, foreclosures, etc. That'll give you time to be able to liquidate gold, liquidate silver, or what have you, to pay your debt off.